Friday, August 2nd. A week ago, I used the earthquake analogy that this week we knew when we might have one, exactly. We just didn't know the magnitude. We knew that Wednesday the Fed meeting would conclude, Powell's press conference could be earth-shaking, and we knew that this morning we would get job data from the month of July, which is often an earthquake event. And I could not have been more mistaken. Humility arrives over and over and over again, the lesson unlearned. While we were in the middle of certain knowledge of when we were at risk, came Trump yesterday morning at 11:30 New York time with new tariffs on China. Blew the financial markets to smithereens. Mortgage rates have dropped decisively below 4. The short-term credit markets have priced in at least one additional Fed easing that hadn't been considered, especially after Powell's post-meeting statement on Wednesday indicated that the rate cut on Wednesday was a 1-2Z deal, just a temporary mid-course correction, not the beginning of a trend. The tariffs are to take effect September 1. Lawrence Kudlow is the senior economic advisor in the White House. Kudlow is even older than I am, and for 50 years, a key piece of his economic thinking has been absolute opposition to tariffs. And so he appeared this morning and to say that they would have minuscule effect on Americans. And not today, not yesterday afternoon. And also mentioned that, well, there's a lot of time between now and the 1st of September. Shortly thereafter, the White House was out making sure that everyone know that these new tariffs will take effect no matter what on September 1st. Powell's press conference and prepared remarks on Wednesday make it very clear that the reason for the Fed's rate cut is overseas. It has nothing to do with the U.S. economy. It's also clear that the Fed is confused and ought to be. The Fed's meeting on Wednesday, there were 2 dissents. There were 2 regional Fed presidents who said, no, that you should not cut. One of them always votes that way and should be discounted. That's Kansas City. But Eric Rosengren in Boston, and with a press release today, made clear that his opposition to the rate cut was, pick an adjective, very strong. And he's supported by at least 4 other Fed officials who've spoken: Mester in Cleveland, Harker in Philadelphia, Bostic in Atlanta, and Kaplan in Dallas. The Fed went ahead with its rate cut, I think, more because of solidarity. That Powell was aboard with half of the Fed who felt that a cut was necessary. But all of that was on Wednesday. Now we have new tariffs to take effect in September. And Trump either doesn't understand or just likes his rhetoric in saying that this is a big tax on China. In my ill-spent youth, I was an importer. I was 22 years old, operations manager for a wristwatch importer. We imported everything from Switzerland. When you import anything which is subject to tariffs, the importer pays the tariff. The exporter can either reduce its price to the importer to cover the cost of the tariff, or the importer can reduce its margins to hold its U.S. prices, or can try to pass through the tariff to consumers. In a world like this, where commerce is no longer taking place on sailing ships and is electronic and instantaneous, prices easily discovered, compared, alternate supply channels all over the world, there isn't any exporter who can afford to absorb a 10% tariff, let alone the original 25% one. Nor are there any importers who can just absorb the costs themselves and not pass them on. And if they attempt to pass them on, the consumer will either buy something else or not buy anything at all. That's inelasticity. The elasticity is on the far side of China. the emerging world, Latin America and Africa, and all of Europe, furiously sell things to China, which China puts in its products and then export to here. So when China has to stop exporting to us, or slow it way down, there is a chain reaction of tail end, rear end crashes that extends from China to Paris and every place in between. As the suppliers to China suddenly find that their exports are not welcome in China, they have to find someplace else to go. And the substitution, the rearrangement of the supply chain, maybe it happens fast enough that the global economy is not much more disrupted than it already is. But on the other hand, if the supply chains can't be readily re-rigged, you wind up with a slowdown everywhere as a result of the tariffs. The whole chain of events is disrupted. The U.S. imports and exports less than any other major nation. Our import-export trade is about 12% of GDP. In Germany, it has approached 70%. It tends to settle at about half of Germany's economy. Not only did U.S. rates fall yesterday after the announcement, the yield on the German 10-year bond is now negative almost 0.5%. And for the first time ever, the yields on all German debt, no matter what the maturity date, for the first time ever today, even the yield on its 30-year bonds is now negative. That's an indication of the expectation ahead, of trouble ahead for Europe. Maybe it washes on shore here like a stinky, recently deceased horseshoe crab. Maybe it doesn't. We're going to find out. In the time being, this is also unstable and crazy. If there isn't any figuring it out. There isn't any way to make plans based on crazy. Crazy isn't going to last forever, but for the time being, crazy is the rule. And so, if it comes to trying to refinance, if it makes sense, just do it. Don't wait for something else, because there's no telling what else is coming. If you need to buy a house, buy a house. This isn't going to last forever. The same thing's true for investment purchase of real estate. This crazy interval will turn into something else, and highly likely to be less crazy than this is. Do have a nice weekend.